Welcome back to TripATrading. In the past few days, I found a brand new TradingView indicator that is basically an improved version of the traditional stochastic RSI indicator. In this video, we're going to explore what this indicator is and how it works. We will also combine it with other technical indicators to create a super profitable trading strategy. So without wasting any time, let's open the TradingView chart. So this is what our chart is going to look like when we're done setting up our indicators. I'm going to be using a Bitcoin chart on a 15-minute time frame to explain this strategy. Now I will quickly remove these indicators from the chart so I can explain everything in detail from the beginning. So to add our first and main indicator of the strategy to the chart, we will click on the indicators table. Now, the indicator that we're talking about is called Stochastic Momentum Index, or SMI. So we will select this one created by this user. Now, after adding this indicator to our chart, there's going to be this dark line right here that is not visible because of the dark mode on TradingView. So let's access the settings. We will change its color to white. Also, we will disable some of these options, which we will not use in our strategy. Make sure you follow these settings so you can follow the strategy I will explain with ease. SMI is a variation of the traditional stochastic oscillator. It measures where the current close price is in relation to the midpoint of a recent trading range with the aim of identifying momentum changes in price. As with many oscillators, it provides traders with insights about potential overbought or oversold conditions in the market. Now this indicator is made up of very few components. Let's go over them real quick. So this white line right here is called the stochastic oscillator. Its main purpose is to identify the position of the current price in relation to a recent trading range. Next, we have this red line right here. It's basically an exponential moving average, or EMA, by comparing the EMA to the stochastic oscillator. This indicator is able to determine the beginning of buying or selling momentum based on the crossovers of the two lines. Next, we have this green and red background fields. By the way, if you don't feel like analyzing prices yourself, you can join my free Telegram group. Here I share daily the buy and sell positions I open. The link is in the description below this video. The green field at the bottom represents an oversold market condition. It's created whenever the stochastic oscillator goes below this blue line at the bottom. And on the other hand, the red fields at the top represent overbought market conditions. And they are formed whenever the stochastic oscillator goes above this blue line. So what exactly are these blue lines? These blue lines are basically the upper and lower bands, and they represent the upper and lower limits of the most recent price range. The upper line is located at the 40 level of this indicator scale, while the lower line is located at the -40 level of this indicator scale. And as mentioned earlier, they're used to indicate overbought and oversold levels in the market. Now that we know what this indicator is made of, let's see how this indicator works. It's really simple. In a bullish trend, whenever the stochastic oscillator white line goes below the lower band, that indicates a weakening of the pre-existing bullish momentum. This also means that the market is in a pullback, and traders should pay attention to this because they represent areas of potential trade entries. On the other hand, in a bearish trend, whenever the stochastic oscillator goes above the upper band, that indicates a weakening of the previous bearish momentum, and it's also an indication of a market pullback. And these types of pullbacks represent areas of potential trade entries. Now let's see how we can use this indicator to take trades. In a bullish trend, for example, we will wait for this stochastic oscillator to go below the lower band. This indicates a pullback in a bullish trend. After we have the pullback, we want the stochastic oscillator to come back above the lower band and cross above this red EMA. This crossover indicates the end of the pullback and the beginning of a bullish trend. And this is where we're going to enter our trade. And for a sell trade, it's going to be the opposite. So in a sell trend, we will wait for the stochastic oscillator to go above the upper band. This indicates a pullback in a bearish trend. After we have the pullback, we want the stochastic oscillator to come back below the upper band and cross below this red EMA. And this is where we're going to enter our trade. Now the question is, how do you make sure that the market is in a bullish trend or in a bearish trend? For that, we will add another indicator. So we will click on the Indicators tab again, and we will search for EMA Trend Cloud and add this one created by R. Westbrook. Let's access the Settings panel on the Inputs table and change the Fast EMA length to 50, and then change the Slow EMA length to 200. After that, we will head over to the Style tab and uncheck Fast EMA and Slow EMA checkboxes. Now let's go through the complete rules for entering a buy and sell trade using this strategy. If you are wondering which exchange I trade Bitcoin and other cryptocurrencies on, you can press the link below this video and take a look at Bybit. On this platform, you can easily make a deposit from your bank account and trade over 150 cryptocurrencies. You can use leverage up to 100 times while trading to make profits even faster. In addition, you can use a 4-price layout to keep an eye on multiple cryptocurrencies at the same time. If you also want to trade on this exchange, visit Bybit through the link below this video, because through the link, you will get a deposit bonus up to $30,033. So for a buy trade to be valid, first of all, we want the market to be in a bullish trend, and to confirm that we just make sure that the EMA trend cloud is colored green and the price is trading above it. Secondly, we want a pullback to happen within this bullish trend to confirm that we're going to pay attention to the Stochastic Momentum Index indicator. We're going to wait for the stochastic oscillator to go below the lower band of the Stochastic Momentum Index like this. This indicates that the market is in a pullback. During the pullback, the price should touch the EMA trend cloud without breaking and closing below it. If a pullback just happens and the price doesn't touch the EMA, we will skip the trade. After that pullback, we want the stochastic oscillator to cross above this red EMA, and that crossover should happen above this lower band. If the crossover happens below the band that setup becomes invalid. Last but not least, we want the crossover candle to be a bullish or a green candle like it is right here. So we will open a buy position here. The stop loss is going to be set below the most recent swing low. And for the take profit target, we're going to set at 2.5 times. I hope I have explained the conditions good enough. These are 3 more positions I opened using this strategy, and all of them were profitable. Now let's go through the rules for entering a sell trade using this strategy. If you don't want to analyze prices yourself, you can join my Telegram group to get free buy and sell signals. The link is in the description below this video. For sell trades, we're just going to reverse all the conditions. So first of all, we want market to be in a bearish trend, and to confirm that we just make sure that the EMA trend cloud is colored red and the price is trading below it. Then we want a pullback to happen within this bearish trend, and to confirm that we're going to pay attention to the Stochastic Momentum Index. We're going to wait for the stochastic oscillator to go above the upper band. This indicates that the market is in a pullback. Then after that, during the pullback, the price should touch the EMA trend cloud without breaking and closing above it. After the pullback, we want the stochastic oscillator to cross below this red EMA, and a crossover should happen below this upper band. If the crossover happens above the band that setup becomes invalid. And finally, last but not least, we want the crossover candle to be a red candle like this one. So I'm going to enter a sell trade here. Our stop loss will be set at the most recent swing high. And for the take profit, we're going to set it at 2.5 times the risk. We let this trade run and take profit now. I hope you guys have understood the rules completely. Please feel free to share your feedback about this strategy in the comments section. Please make sure to click the like button and subscribe to my channel. Thanks for watching the video till the end. I'll see you guys in the next video.